Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, March 29th, and this is the weekly market update. The disclaimer, as always, anything that you hear or see on this podcast or video, not to be taken as investment advice, not a registered financial advisor, and I cannot give you personal individual investment advice. Everything that you hear or see on this podcast or video is for informational purposes only. If there's any discussion about investments, it's in general and not specific to any individual. Please do your own due diligence. It's your money. It's your responsibility. Okay, let's start the slides for this week. So here's a chart here talking about University of Michigan expected change in prices during the next 5 to 10 years. And this is the expectation of people. They do a survey. And what are we seeing? We're seeing that people have long-term U.S. inflation expectations are the highest since 1993. Why is this important? Because inflation is, in fact, a monetary phenomenon, as Milton Friedman said, everywhere and always. It's the printing of money that causes prices to go up. And after the last bout of inflation, what the danger is that you uh, import into people's minds, into their psyche, an inflationary mindset, right? And so if people think prices are going to go up over time, what are they more apt to do? They're apt to change their behaviors, okay, like we saw in the 70s. Um, and I think that we're going to see more of this and have that mindset be more prevalent. And we've just seen that in some recent wage negotiations with some of the various workforces, represented workforces, like, oh, for example, the Longshoremen's Union getting a 60% wage increase, I think, over 4 or 5 years. Things like that start entering into the thinking, right? And, um, I definitely think that the MAGA movement and the Trump administration's constituency is working class people. We've had 40 years where we financialized the economy and the top people, the pointy shoes, the establishment, the upper class, whatever you want to call them, have benefited at the expense of the working classes, small business owners, and tradespeople. And that's going to reverse now. And you're going to see more of the economic pie move away from uh, the upper echelons and filter down to others. Um, that's what a lot of this trade policy is about. That's what some of these things are about, right? To make America great again. A lot of people don't like that, but you have to understand that in politics or in marketing, you don't have time or inclination, or the people themselves don't have the ability or time to sit there and absorb huge concepts about the monetary system and wealth inequality, what causes it, and trade policy. You have to have, as most propagandists know, two or three uh, um, short sentences, concepts, and you repeat them over and over. That's what drill baby drill means. Doesn't necessarily mean they're going to drill from oil. It means get energy production on. Make America great again. You know, bring that's encompasses the whole trade policies. Just not you can't sit down and have 4 hour lectures, college level, 400 and 500 class level discussions about this with the average person because they don't have any background to understand. So you have to speak in these generalities. And so I think we are going to see higher inflation over time for different reasons that we've talked about here. Obviously, these policies are more inflationary. If you deport, millions of low-wage people, the wages on the bottom end are going to go up, but that benefits the constituency of Trump's constituency. Make America great again, right? If businesses want to still provide products and services, they have to raise wages, and that will make inflation go up. The bet is that yes, inflation will go up, but people's wages and their way they're benefiting from the economy will see that and it'll be a net gain. Okay. That's just one example. Trade, initially, we saw that in the recent Dallas Fed survey for the oil fields, drill pipe costs or steel prices are up 25%. Now, the expectation is that you bring that steel production back, that we have steel mills here. But again, as I've talked about before, we've hollowed out a lot of the industry in the West. So it's not, something that gets fixed in a week or two. Okay. These are longer term policies, but they will be initially inflationary. So I think that people's mindsets are starting to change around inflation. I think we can say that we have left behind. We've been pretty prescient on forecasting the demise of ESG, DEI, uh, you know, the renewable hoax, climate change hoax. Um, I think that the 40, 50-year era of disinflation is over also, and you're going to have higher inflation going forward. Uh, you know, one manifestation of that is going to be, or one uh, cause of that will be the deficits in the debt. Uh, we'll talk about that later in this presentation, but I don't believe that we're going to be able to cut the debts. It has nothing to do with discretionary spending. It's all in the entitlements. The entitlements are going to force the deficits up. The inability to pay will become clear. The Fed will monetize. Money will be printed. We've talked about it before. And that will be an upward pressure on prices over time. Going to pay the Social Security benefits, money that they print. So that's just how it's going to be. Not going to cut. We've I even mention it on here sometimes what needs to happen, and you'll see people in the comments go nuts. People have a distorted view of what entitlements are, why they were created, and what the reality of them being paid is. They just don't, you know, uh, propaganda works. I paid into it. It's mine. It's a retirement account. We've talked about the fact that none of this is true. And so people, the problem with those benefits is all these people rely on it. That's exactly right. People do rely on them. They shouldn't though. People worked for 40 years and accumulated no wealth because, hey, they were short-sighted. They were told that they would get Social Security. Now, nobody bothers to look at their Social Security and see that you can't survive on just Social Security. But, you create these moral hazards when the government steps in and plays daddy, and then it can't actually do what it says it's going to do, which is what we're running into now. And this is just going to be another upward push on inflation as they have to print money to cover these expenses. Now, this isn't something that's going to happen the next week or two, but again, we're going back to this is that you're sticking in people's minds an inflationary bias. And this will ultimately change their behaviors at the margin. Here's the federal debt. Debt increases in relation to GDP exceeding any previously recorded level in 2029 and continuing to soar through 2055. It is on track to increase even more thereafter. And we've talked about this before. You can go to the Congressional Budget Office. They have these estimates. You may find it amusing that some of the assumptions they make around economic growth, interest rates, the fact that we won't have any recessions, that kind of nonsense, which of course will exacerbate the deficits, which are already going to, they're unsustainable now. I think a lot of people have pinned their hopes on this Doge thing. I do believe that there is a tremendous amount of waste, fraud, and abuse in the government. I think they had an interview this week. They were continually pointing out these issues. But again, you have so much sand in the hourglass, right? There's no constituency, there's no support in Washington, D.C., except for the president and the current administration for cutting spending. You see the response of the Bolsheviks or the Democrats about this. They lie constantly that they're cutting Social Security, they're going to cut all these benefits. No, they're just getting the waste, they're getting the waste and the fraud. They're going to have their benefits cut. Okay. What's amazing to me is and I think a lot of it's just political because we have to oppose the president. I mean, who could actually be against cleaning up waste, fraud, and abuse? But then when you start digging into this, you start finding that not necessarily in the entitlements, but certainly in USAID and other things where grants, money was given just to Democratic constituencies, which a certain amount of that would then be funneled back to the DNC and to Democratic politicians for reelection. So there was crookery on a massive scale. So of course they're against it. They're against it. Number one, they don't want to have the sunlight shined on it because sunlight cleanses, right? They don't want anybody looking at anything because there's basically fraud and criminal behavior went on. And number two, that's their real funding. You think all those slobs that go out and with a piece of cardboard on a stick, or these nitwits that are on a Wednesday afternoon protesting at the Capitol, who do you think's paying for that? Well, these all these NGOs and these, you know, these Democratic constituencies. So they basically, you go to work every day, you get taxed to death, you get regulated to death. That money gets collected by the government, and then it gets funneled to people that are diametrically opposed to your way of life. How do you feel about that? Of course, they don't want it to end. These people don't have any money. None of these people work. I mean, a guy said that to some of these protesters the other day. He was out amongst them. You know how these people go out, they try to get footage so they can put it on YouTube or TikTok or what have you. And he was talking to one of these slobs, and you know, the guy was like, "This, it's like a Wednesday at 11 o'clock in the morning. You don't have anywhere to be. You don't have a job. Where is it you work? Don't you work?" No comment. I don't need to answer that. None of your business. Well, they get money from these NGOs and these organizations that basically get grants and get money funneled from the federal budget to them. So, of course, they're trying to end that. And so don't think that the Republicans are for this either. Okay. You don't see the Congress passing any legislation or doing any investigations. Okay. They're just hiding in the background, hoping that, you know, pushing the Democrats out there, and they're taking all the incoming fire. They have their constituencies also that they funnel money to. And so you keep going to work, American worker, 40 hours a week, or working two jobs to make ends meet, and then look at the money that goes to the how you're taxed to death, and then realize where the money's going. And then you see why there's so much resistance to this. And so it's just like Elon Musk said, this has to change or we're going to go bankrupt. We are bankrupt right now. And so you will listen to some of these politicians get up there and say, they'll find somebody. Mistakes are going to be made when you do this stuff. Okay, somebody's going to inadvertently have their checks cut. They just need to go in and get it reestablished, what have you. But that's what we find this anomaly or this exception to the rule and make that the rule. That's not the case. Okay. The problem is that the average person doesn't seem to understand that if you don't fix this, we're all going to be up a creek without a paddle. Look at, developing world countries, third world countries that have monetary policies that are out of control, where they spend more money than they take in and print money to make up the difference. You have tremendous inflations, you have poverty, you have a lack of economic growth and opportunity. That's what you will have, stagnation. And everybody will suffer. And so this is why this has to be dealt with. You have to get this down. Now, I have my own view about how they're going to deal with this. Um, they're going to, eventually we're going to end up in some type of yield control situation. The Fed's going to buy back a bunch of debt like they did after World War II. You can look back here. After World War II, you had the debt to GDP went over 100%. It went from under 50% to above. Then you just need to understand what they did over the next 20 years or so. You see, they got it down to about 25%. And how did they do that? You need to understand how they did that. Okay. We talked about inflation is going to be higher. So if you have an inflation rate running at 4.5 or 5%, and you hold rates down at 3.5 or 4%, you can slowly make this number go down over time, this debt to GDP. The problem is this entitlement monster is going to eat us alive. And people don't seem to understand. They don't even want to discuss it. Depending on who, I've talked about this many, many times in the past, 100 to 200 trillion dollars in unfunded liabilities, and then nobody wants to discuss. So there will be changes to these programs. There has to be. They'll raise the retirement age. They're going to do means testing. They're going to do all kinds of things. They're going to raise Social Security thresholds for Social Security taxes. Okay. Uh, you know, They're going to have to do all these things to try to save it at the margin. And then they're also going to end up just printing the money. Okay? It's just unsustainable, folks. And so I wish Doge well, but I see what the resistance are up against. The entire media complex is against them. The entire establishment, the Borg, the blob, the swamp, what have you, that stuff exists. And so what needs to happen is aggressive investigations and prosecutions of people that actually committed the fraud. By the way, I'll throw this in here. I'm not suicidal, and I don't have no issues around committing suicide. Where are the Jeffrey Epstein files? Where's the tapes? Where's all that information? Pam Bondi. And this is what you have. This is what happens when you have deficits out of control. You have to sell the debt. Okay. When you have debt, more debt, okay, you have to sell it to somebody. In order to get people to buy the debt, rates have to go up. Okay. Rates have to go up to entice people to, you know, people look at this and say, you want me to buy a 10 or 30-year security when the debt is on a 45-degree up angle? Are you going to be able to pay this debt back? You see, you start calling into question the solvency and the ability to pay of the United States. And so people request and want higher rates as compensation for that risk. That's that's how this works. And if you have higher rates, guess what? You have higher interest rates for houses and cars and everything else. You see how all this ties together? A lot of people don't understand that. Do you want to look at some technical? This is going back, this only goes back to like 1988, but rates were way higher here. So we had 40 years of declining rates and disinflation. Now that's reversed. We're definitely, if you want to look at I'm not a technician by trade. I will look at charts sometimes, but I don't put a lot of stock into them. Mostly my analysis is fundamental. But this is classic. This is a classic breakout from a massive downtrend. And now and this is going to be multi-year because this is multi-year. So rates are going to be heading higher. So at some point, they're going to have to cap this. That's where yield curve control comes in, where they say, that's it. We're not letting rates go any higher than this. And so the New York Fed trading desk will just go in and buy bonds with created money to hold the rates down. That's how that works artificially. So when people sell their debt, this is the whole Cantillon effect again, right? We've talked about that. Wrote a big article about it last year in the AIA paid newsletter. So when when the Fed just creates money out of thin air and buys these bonds, they're buying them from somebody. And so somebody sells the bonds to the Fed, they get this created cash. They have to do something with it. If it's an investment firm, they're going to have to put it into something. Are they going to put it into gold, real estate, stocks, corporate bonds? Who knows? Okay, that forces those prices up. That's why you had an asset bubble. That's why all these QEs and everything cause all those asset bubbles. When you create money, people say there was no inflation during all these QEs. You're right. There was no consumer price inflation, but there was asset price inflation, massive asset price inflation that created massive wealth, unearned wealth by the top 1%. So if you're an asset holder, see, this is why we're getting back to the whole thesis of real assets and tangible assets. You have to be an owner of those things going forward because the money creation is going to be mind-boggling. And those who hold tangible assets, as the Fed, government get into this money printing, which they're already in, it's going to ebb and flow. It's not going to be a continuous up. There'll be ebbs and flows. There'll be cyclical bear markets inside of a secular move, multi-year move. But you want things that are tangible. As they create more money out of thin air with the press of a button, you want things that cannot be created out of thin air. Energy, gold, yes, even Bitcoin, things like that. Tangible assets, things that have scarcity associated with them. Land. It's not hard to figure out. So we're, I know we're supposedly in one of the best economies ever, but Americans fall behind on car payments. I like showing these charts, not that I get any glee out of it, but when I look back at like 2008, the GFC, I mean, we're at levels exceeding the GFC in some of these stats. That's what I like to point out. The economy's, I mean, we really have a really a Potemkin village economy where the upper people are doing well. Again, I've stated this for over a year. The bottom half of the population is really struggling. I don't know how people are making it. I've said this many times. So this is the percentage borrowers at least 60 days late on their car payments is at the highest on record. We're not even in a recession yet. So this is Schiller PE. I like to show this. It shows the cyclically adjusted PE ratio. You see that the current ratio is at 35.58. Here's the mean and the median. Basically, we're extremely overvalued. Um, this is the tech sector when we were around 45, peak of the tech bubble, internet bubble. Um, and so I think we're looking at a period of mean reversion. The problem is that when you have these big extremes like this, you don't necessarily you see during the tech bubble over it took a decade or so, but it corrected down to the a little bit below the mean or the median, down to 15. And so this is a period of time when value stocks and commodities and resources did very well. I think we're in a similar situation now. And it won't happen in a week or two or a year, but you'll just have underperformance and the S&P will slowly bleed off. It's interesting. People say, well, the stocks that you're recommending could go down too. Initially, they will if you have a big move down, but you have rotation, right? Because if you look at the components of the S&P 500, there's no there's no very little. I think energy's 3% of the okay, in mine, I think there's like one or two mining stocks. They just don't have a presence in the index. And so as tech bleeds off and money rotates into these other things, they then start getting uh, put into the index, okay, over time until they eventually peak out and then the whole cycle reverses. And so what I'm trying to convey to you is even though we've had recent market weakness, we still have a long way to go down. And again, it's the same thing around mentality. People now have benefited from this market for the last 15 years or so. It's done nothing but go up, buy the dip, all that. That has been imprinted on people's minds. And it really hasn't, you know, that stocks always go up, and if they go down, you just buy them. But you have an environment where rates are going up, when you have an environment when inflation is going to be higher, that's not conducive to higher stock prices, especially in the tech sector. Okay. So I wanted to point this out, copper and gold making new highs. Obviously, the copper price is on the left, the gold price is on the right. It's interesting because it's also interesting that a lot of times you will find copper and gold together in the same mine. But anyways, I think with respect to copper, I'm bullish on all these resources. I don't necessarily think this is a fundamental move. A lot of people are saying, and I don't know. I mean, I'm not a trader. I don't know for sure, but um, I do know there's been underinvestment in copper. A lot of this is, I think, buying. Chinese have been in buying. A lot of people are just buying, I think, because of the impending upcoming tariffs. They want to lock in their supply now and prices now. And I think that's been some buying for that. So we could see a pullback in copper prices. A lot of folks are saying, I don't know. Nevertheless, I am bullish longer term on copper for many reasons that we've talked about before. I'm also bullish on gold. As you well know, we're in a gold bull market. I would say to you, though, that um, too many people are talking about gold. The sentiment is too bullish. I'm seeing it all over Twitter. People I've never even heard of posting things about gold being bullish and we're in a bull market. This is something I think that is indications of a near-term top. I wouldn't be surprised. I mean, gold's really overbought. There's nothing saying it can't just keep going up. But I think if I had new money I was looking to put to work, I don't think I would just be putting new money into gold right now. I think over the next year, 2, 3 years, whatever, it's going to make new highs. I could see gold at 5,000 an ounce in a couple of years. But I don't know if I'd enter right now. I think you're going to see a pullback. You got to shake off all these people, right? This is what happens in a bull market, right? Price starts to move, it attracts attention, new investors come in, speculators, I guess would be a better term. They start buying. They buy into the narrative. They don't really understand because this thing's the shiny object. It's going up in price. I buy. Um, then everybody's in on the short or intermediate term. There's no further buyers to come in to push the price up, and then you have a correction, and then you shake off all the weak longs and people that really were just, again, tourists, if you will, or visitors to the theme. Then you make a bottom, and then you continue upwards again for the next leg. That's how bull markets work. Uh, so that can be anywhere from several weeks to a couple months. And so I could see gold going back under 3,000, going down maybe to 2,800. I mean, I'm not a technician, but I think you can see that. Okay. This is what happens in a bull market. Nothing goes straight up. Eventually, I think we'll have a blow off top, but that's not something I'm anticipating in the near term. But right now, I think that, I mean, again, the sentiment just seems too bullish. There's too many people on the gold story. Like I said, I think social media is a really good indication of sentiment if you know how to read it properly. And I think that again, too many people are coming out of the woodwork bullish gold. And so I think we have a chart here that let's see here. Oh, here we go. So gold is overbought. Sentiment seems too bullish. This is a channel that gold's been in for the last year, over a year. And we're way, typically this is what you see if you want to use technical, you kind of stay in these channels, you hit the top, you pull back, and it just works its way higher inside the now you've broken out of this upper channel. That means you could keep going up and have a, straight up move. I don't know. I'm not, I can't know the future, but typically this will probably correct. That's where I kind of get that 2,900, 2,800 number. You correct over, a period of time, as you can see, and then you start making the next move higher, right? And so I wouldn't be shocked if we get a correction in gold. And that would be a great opportunity to re-enter. I mean, we've seen now finally gold stocks are breaking out left and right. They probably need to pull back a little bit, shake off the longs, shake off the tourists, and then have everybody say, see, these gold stocks stink. I don't want anything to do with them. And they'll typically pull back to where they originally broke out, and then we could probably see another move higher. So I anticipate this happening. I wouldn't be shocked, let's say, I'm not going to say I anticipate it, but I wouldn't be shocked to see a pullback to shake off some of the enthusiasm. But I do want to show this. Emerging markets need to buy a lot more gold. This is the emerging markets central banks remain significantly underweight gold reserves to developing markets. You see a lot of developing markets gold reserves as a percent of total holdings. And you see the world average down here at 20%. You see the USA, Germany, France. I mean, they've had hundreds of years to collect their gold. But again, gold is moving from the west to the east. You see India and China, they've been adding gold. Um, that's where the demand's going to come from. That's where the demand over time. It's not something they're going to do in a year or two. It's a long-term process. Again, this is going to be another outcome of the bullying of the U.S. and the hardball tactics and this decline in U.S. hegemon into a multipolar world, right? Um, Again, it goes back to what I think was the defining moment of confiscating Russia's assets after the invasion of Ukraine. That sent a message around the world that if you get on the U.S.'s bad side, they'll just grab your cash, and so which is not a good idea Also kind of ties back to the theme we were talking about earlier about the debt going up over time. A lot of that debt historically has been held by foreign countries. U.S. Treasuries are a tier one asset uh, for banks, according to the Basel Accords for the Bank of International Settlements. And the other asset that's now a tier one asset is, of course, which has been approved recently, is gold. And that's interesting that they did that. And since they've done that, we've seen countries accumulating gold because the writing's on the wall. The U.S. is a bankrupt country that's going to issue a lot more debt, and its solvency and ability to pay back its debts is going to be called into question. And so it cannot be relied on as a tier one asset any longer, as a reserve asset. You know, it's not over yet. It's still there, but another asset class has been added to be a tier one asset for reserves, that being gold. That's interesting, isn't it? So, of course, we showed that chart. So this is an article, Why Copper May Be More Important to the U.S. Economy Than Oil. Copper is a critical material used to make many of the things consumers use every day, but its importance has taken on new significance. President Donald Trump now sees imports of the industrial metal as a potential national security risk. Copper is the new crude oil, said Phil Flynn, senior market analyst at Price Futures Group. It's probably more important to the U.S. economy right now than oil, calling it the new hottest commodity on the globe. I don't like when people say this because crude oil is basically allows civilization. Copper is very important, of course, but I don't like when people have these when they say stuff like this. It's too glib. Anyway, in fact, the U.S. will need an all of the above sourcing strategy to secure a stable supply for domestic use, said Adam Estelle, the Copper Development Association's president and chief executive officer, in a statement sent to MarketWatch. CDA represents domestic copper producers. The reason I wanted to talk about this is because I'm reading a pretty extensive article in the April issue of the Actionable Intelligence Alert newsletter, the paid version. I think something that a lot of people aren't discussing that I think is going to be a major catalyst for the MAGA movement and for this country. Uh, during the Biden administration, the industrial policy they pursued under the Inflation Reduction Act, renewables and all that stuff. I mean, it was a pretty big boon to the economy. I didn't necessarily agree with it. I thought it was a big sugar high. I saw at the last stages of my career, the renewable industry, how it was just stretched to the max for labor, for resources. It was blowing up everywhere. The economic fallout of that and positive fallout it had for me personally and for many others. There's just not enough people or assets to build everything. I think that something similar is going to happen to mining now. The president passed, signed into effect an executive order on a national security uh, uh, auspices of sourcing here in the U.S. all of our mineral wealth. And what I'm doing is I had AI do a deep research project on the value and the constituents and value of the mineral wealth of the United States. I didn't even include Canada or Greenland or North or the whole Western Hemisphere. I guess that's be something else. That's why, you know, back in the day we had the Monroe Doctrine. I think that this president, I've dubbed it the Donroe Doctrine. And the tremendous amount of wealth that probably is in the tens, if not hundreds of trillions of dollars of mineral wealth that just hasn't been allowed to be exploited here in the U.S. and North America in general, fully, the full potential. And, you know, President has determined, the administration has determined that's a national security situation. We can't, I think there's on the critical minerals list, we pretty much import 24 something. I think it's 24 out of the 25 critical minerals, many of which are available here in the U.S., but just haven't been allowed to be developed because of NGOs and environmentalism and court cases. And so determining this to be a national security situation, um, as we see in this first blurb here, gives the government power to force this to be allowed to happen. And so we've already seen, there's so many mines you can talk about off the top of your head. that have been stymied over time because of environmentalism. This will open up the hundreds of millions of acres of federal land that has been off limits to mining. And so what I'm trying to tell you is this could have a tremendous, it's a national security situation. It's stuff that we have here that we haven't been able to exploit. Okay. I'm not saying just go out and robber baron this thing and cause all this environmental devastation, but we have things that can be developed here in a responsible way. We should do it, and that's what the president's going to do, and that's going to have a tremendous effect for his constituency, people in the labor force, tradespeople, working people. The fallout of having a mine that has a 30 or 40-year mine life in a community, all the ancillary businesses that spring up around it to support it, okay, for people to spend money, okay? It could be a tremendous boon to the economy. And so that's what I'm writing about. I think you'll be shocked if you are a subscriber at really how much mineral wealth the United States actually has that hasn't been able to be exploited because of uh, court cases and NGOs. A small minority of people have been able to stop development. And so I think this classified as a national security risk, as a national security situation, gives the administration more power to supersede some of this nonsense. And so we'll see how it develops, but that's what I'm reading about. I was actually shocked that, I mean, the AI did a tremendous job. It took it like 40 minutes. You could see it like it was processing off to the side. It was asking questions. I'm now looking at this. I'm going to go back and look at that. And it put together a pretty decent report. So I've taken a lot of the highlights out of that and going to put it into the newsletter next month. It's tremendous, actually. So it's something that if I did that on my own, just trying to do it, it would take me a couple of months, and it did it in 40 minutes. So I'm convinced of AI. I don't know, the development timeline or how they're going to make money off it, but that really was a demonstration to me of the power that it had. Um, Gave all the sourcing, all the citations for it. I don't include them in the article, but it just didn't make the stuff up. It was citing different government databases, USGS, different research papers. It was very interesting, actually. So that was kind of a side note to that. But I'll be putting that into the next month's newsletter. And I think that's going to have a tremendous investment uh, theme for us also, part of this thesis, not necessarily just investing in mines, but all of the ancillary support, the picks and shovels, if you will. Uh, that's where the money's made, really, in investing in these resource bull markets. So I wanted to point this out, uh, I've shown this before, I think, but I came upon another chart. So I said I'd just remind everybody that energy is life, energy is everything. And in order to have higher levels of per capita GDP, to have a wealthier society, to enjoy the fruits of living in a modern, technologically advanced society with all the things that go along with that, requires energy inputs. There's no such thing as a rich yet energy poor country. It's just not possible. And so it's not, I find it amusing, but it's actually sad when I see, you can see the outcome, especially in places like California or New York here in the US, or in the entirety of basically Western Europe, where the political class is deliberately trying to restrict energy to the population. The outcome of that will be populations that become less wealthy, that become, you know, have less goods and services. It's just what's going to happen. And we're already seeing it. We talk about the deindustrialization going on in Germany. We see in the UK what's happening. And so these politicians go out, Ed Miliband on his crusade for 2050 net zero. It's impossible, folks. It's not possible. Okay. You will become poor. So the trade-off is if you want to have this, if you agree with it, you need to be poor or less wealthy. Your standard of living will go down. The average person didn't get to vote on that, doesn't want that, is not on board with that. As they become, as they begin to understand that, they will revolt against it. They will buck it. Okay. And if they're still able to vote, but we see what has happened in the EU, for example, political parties that are against that AfD in Germany, for example, continue to get support, but yet cannot get, into the coalition government. You see, and most of these parties that are rational in their energy policies are trying to work for balance with economic growth and try to get more economic growth, also happen to be pro-nationalist. They tend to be anti-EU and centralized government because this is the type of nonsense. The Soviet Union didn't work. Central Gosplan with all the smart people inside the Gosplan building. So this huge building in Moscow, multi-story. I actually have talked about this before. There's a video. I got to track it down, and a guy goes there, and he's walking through offices after office, multi-floor. So he stops in one office, and there's like three guys in there with notebooks and chalkboards. And so, what do you do? They determine, the three PhD economists in there determine the amount of toothbrushes that should be manufactured every year in the Soviet Union. I'm not making this up. And so they were doing all these calculations and discussing this. Their whole life revolved around this. But I guarantee you, they had toothbrushes in there. They were of poor quality and only one kind. Okay, that's not going to work. And so when you try to centralize this, when you try to technocrat this, you know, the solution to the problems in Western Europe are more Europe, according to the technocrats. Well, that's because they want to remain in power and get the benefits of remaining in power. You know, all animals are created equal, except some animals are more equal than others. If you were Ursula von der Leyen and all her cronies and all the people that are in her wake benefiting, you don't want the EU to lose power. You don't want the EU to go away. You're incentivized for more Europe. The solution to every problem is more Europe, more centralized power, more regulations. And when it doesn't work, when Ed Miliband's, when people become poor because of energy poverty in the UK, we need more legislation and more programs instead of just allowing the free market to provide the and develop all of the energy resources in the North Sea. That can't possibly be the solution. So, you know, again, you see that here's the GDP per capita. You see the countries with the highest GDP per capita, they have the highest energy consumption. There are no wealthy countries with low energy consumption. It's not possible. And so there are people, there are a very small minority of people that are willing to trade economic growth and prosperity because they want to live in tune with nature, and they should go live in communes and buy some property, and they can live in nature, and they don't have to have the internet. They can have solar power and, you know, take a hot shower once a month and all those fun things, live like a hobbit, go out and try to scratch it. Some people enjoy that. Most people don't. Most people don't. And so if it's put to a vote, people won't vote for it, but they don't let you vote for that. See how it works? So whether you like it or not in the West, if you don't want to use the energy resources that are available, if you don't want to develop, that's fine. The developing countries do want to develop, and they're going to. This is where we're at now. Here's the OECD countries. You see that energy usage has actually went down. That's why they're becoming poorer. That's why they're stagnated. One of the reasons. You see, I mean, obviously this is also because of COVID and pandemic. You shut the world down, so you had this down blip. But you see the projection of the developing world. You know, the leadership of the People's Republic of China, I'm no particular friend of, okay? Or or some of these more autocratic governments around the world, but they understand that they still have to have the acquiescence of the people to rule. Whether it's a totalitarian government, whether it's a communist government, socialist, whatever, democracy, monarchy, whatever, because eventually the people can rise up. We've seen it time after time throughout history. And so the trade-off is the Republic of China, the government there, we give you prosperity. You don't try to overthrow the government. Okay. And so they have to deliver prosperity. That means higher energy. usage over time. And you see the energy policy is a basically everything energy policy in a place like China. Yeah, they have renewables, but they also have nuclear. They also have coal. They don't try to, have this crazy view that, you know, about CO2, which is a gas that's necessary for life. And as the country becomes wealthier, people will demand higher and higher, better environmental standards. We've seen that, okay, throughout history. That's what ends up happening. Poor countries that don't have economic development and don't have access to hydrocarbons or electricity, these are the people that chop down trees and burn for wood or use animal dung or what have you. Okay. So this was somebody put together this chart from the Dallas Fed. They have their an energy survey every quarter. And this is somebody took a lot of the comments. I haven't put together this little graphic, which I think is cool. So it shows you in your two top plays. This is a question that went out to oil folks, oil companies and oil men. And your two top plays, what West Texas Intermediate price do you need to drill a new well? And you see over time the answers, right? Uh, in 2020, it was at a low of $49 a barrel. Now it's upwards of 69. It shows the different key U.S. basins for a new well price. You see Delaware, that's Midland. These are in the Permian, other Permian 70. So you're in the 65 range is the average. You need $65 in order WTI to drill a new well. We're basically just slightly above that. And so we've seen, I didn't put the chart up this week, but I just saw somebody had it out, the chart that I was going to grab off X that shows the amount of frac crews out there, right? Because wells drilled, you can drill a well and just let it, drilled but uncompleted, right? You can leave it sitting there uh, until the frac crew comes and fracks it, right? And we've seen the amount of frac crews are down, I think, to around 200 for active frac crews. That's down 50 crews from last year. Why is that? Because the returns that you can get, prices are low, that they don't incentivize the oil companies to complete these wells and bring them on. So you spend the money to develop, you're spending more money to develop lower tier wells, and the price that you're getting for the product is not sufficient to give you your money back plus a decent return. And so we know what happens with these shale wells. They decline very quickly. And if we're not, it's a Red Queen's race. And so that's where we're into this discussion among different people around the oil patch. Has U.S. production peaked? Or is it at the end of $49 oil and 65 or 70 is the new 50? I mean, that's part of the question, right? Because we haven't seen any growth in oil production basically in about 2 years in the United States. It's pretty much flatlined. And so the argument is that that's that's what you see at a plateau, and then you start entering the decline phase. I'm not ready to say that, but we'll see. And I think that if we do plateau and we do start to decline, as that information gets priced into the market, uh, this is why I'm bullish on several companies in Canada with long life shale reserves. Okay. Because that investment has been made. You're the beneficiary of investments that were made years ago, and then those companies just require maintenance capital and can produce tremendous amounts of oil. And if we're in a situation where oil production in the U.S. has possibly plateaued, I'm not even saying declined, and yet oil demand is increasing around the world, which it is, these folks are set up be cash flow machines. And even at the current prices, a lot of these companies are cash flow monsters. They've spent the last 5 years not expanding production, not spending billions of dollars building new oil field or new oil sands, plants. They've paid down debt from the previous investments. They got the debts down to manageable levels, thresholds, and then they're taking that excess cash flow and return it to shareholders via dividends and buybacks. And that's at the current oil prices. And I anticipate higher oil prices over time. And so they are set up to be tremendous cash flow machines. Not only that, we're seeing valuations reminiscent of the COVID lows, pandemic lows. You're getting another bite at the apple. So let's look at some more here. Some comments from the survey, the Dallas Fed. The U.S. oil cost curve is in a different place than it was 5 years ago. $70 per barrel is the new $50 per barrel. These are quotes from the survey from people in the oil patch. First, trade and tariff uncertainty are making planning difficult. Steel prices have risen over 30%. Here's another quote. Drill, baby, drill is nothing short of a myth in populist rallying cry. These are from people in the oil patch. To stimulate new activity, oil prices need to be in the $75 to $80 per barrel range. That's WTI. We're not there right now. I have never felt more uncertainty about our business in my entire 40-year plus career. And so they have this other thing over here, uncertainty index. Management uncertainty is still elevated, likely implying continued hesitation in expanding CapEx plans. So people have a hesitancy to spend money for more production. We've talked about that also. We've talked about the consolidation in the Permian, for example, into the large companies. Yes, there's still independents out there, but basically you've consolidated a lot of the acreage, and the companies are not talking about drilling more wells. They're talking about maintaining production or slightly increasing it. You know, I put a chart up this week on the Facebook page. We have the Actionable Intelligence Alert group Facebook page, which you can find a link to in the show notes below. But I put something out there where Exxon has redone its reserves. You know, they acquired Pioneer, which is a big Permian operator, and then, you know, Pioneer said at that time before they sold to Exxon that they had something like 12 to 15 years of inventory. And then once Exxon bought them, Exxon discovered that maybe they only had about 8 years of inventory. And so there's not going to be drill, baby, drill. Conference call after conference call with these companies has verified this. No one's just going to go out and the other thing is we're starting to see not more oil production, but we're seeing more liquids production. We're seeing more gas being produced, more natural gas liquids, butane, pentanes, that kind of thing. Okay. And that's what the whole drill, baby, drill propaganda that you get from the administration. One of the quivers in the three arrow strategy is to get energy prices down, but they're just talking about hydrocarbon molecules, not necessarily oil itself. Because as you know, all those things go into other, if you get the price of that stuff down, those are feedstocks for plastics and all kinds of other things. And those prices would come down. But they don't explain it to you because most of the people in the country aren't capable, you know, they don't know what butane and pentanes are and what plastic's made out of and chemical processes that have these things as feedstocks. So they would say drill, baby, drill. So this is interesting. This is worth watching because when you have the oil patch saying the U.S. cost curve is in a different place than it was 5 years ago, $70 a barrel is a new 50. You see it here. That means the threshold's going up for what you need to drill new wells. And with the depletion is there and it's constant every day. And we know how fast shale depletes. And so I want long life assets that already have the most of the investment made. I'm the beneficiary, crown jewel assets in Canada of oil sands assets that have already been paid for, that are up and running, and I'm just going to reap the fruit now as oil prices potentially go higher, those cash flows that are going to be the fruit of those previous investments. And I'm not on the hook for those paying back that debt because a large portion of it has been paid back. I think that's a tremendous value proposition. I'm going to throw a name out there. CNQ, Canadian Natural Resources, probably the best, not only the best run oil company, best management, might probably one of the best managements overall of a corporation. Tremendous company. You should look it up. You should study it. You should see what they've done. I think that they have a compound annual growth rate in dividends in the double digits. Somebody asked me the other day in the Substack, email me, what kind of companies are you talking about? That's a company I'm talking about. That's one of the ones I'm talking about, CNQ. People say, well, it's a big company. I know you want that little junior penny stock that's going to go up 10,000%. We're here to create wealth. Energy thrives in an inflationary environment. Company like CNQ that's very well managed, that buys assets. Look at the acquisitions they've made over time, and look when they made the acquisitions. They don't buy at the top of the market; they buy at the bottoms. I mean, I'm just giving you a quick, synopsis. That's the kind of company, and it has decades of reserves. It's not going to be subject. It doesn't have to make huge investments. It's been made already. And so they're buying back shares and their dividend goes up over time. And if you're going to be in a rising oil price environment and the share price is down massively, okay, because nobody likes energy, something to think about. Okay, this would be the time when you would need to leave if you're not interested in my political discussions. I know a lot of people aren't. And so I will take a short pause and take a sip of coffee while those people disengage. Okay, we're back. So this is another example of what I've been talking about, not only a lot in the US here, when I was pointing out over the last several weeks, the lack of a shipbuilding industry in the US, the fact that our steel industry's atrophied, our mining uh, industry has atrophied. We've allowed it to atrophy. We've financialized our economy. We threw in a couple dollops of ESG to ensure that we don't develop anything. And so my contention is that you can't be a a world power, a superpower, and be and not have any industrial base. It's not logical. You can't rely on imports for a military industrial complex if you choose to want to project power or protect your interests. Like even if the United States isn't necessarily the world hegemon going forward, even if you want to continue with the Donroe doctrine and just focus on the Western Hemisphere, you still need to be able to project power into the Western Hemisphere. Now, I'm not saying that these are good things. You know, that's another discussion. I'm just telling you what's happening. And so I find it sad yet amusing when I see people like Keir Starmer and Macron and some of these other clowns in Western Europe talking about they're going to send troops, like they're relevant to what's going on in the discussion. Uh, you know, we're going to do this, we're going to do that. Like it's 1842 and they're like the world power still. Okay. And I think this ties into it. It says, here's from the Telegraph. British Steel has announced plans to close its two blast furnaces in Scunthorpe, signaling the end of steel production in the UK after more than 150 years. It has a little, I didn't read the article. I think it was paywalled, but it says British Steel's Chinese owners reject 500 million pound taxpayer probably to keep it alive. Well, why would the Chinese company want to keep it alive? They can make steel in China and have Britain import it, right? So Britain and Western Europe are talking about increasing defense spending by 900 billion euros collectively, yet they have no industry. Where are they going to get the steel to make the tanks and the artillery pieces? They're going to import it from China or India? Does this make sense to anyone? Does it seem like rational? Do these people seem like they know what they're talking about? Or are they just talking? I mean, if better, better, better to just sit there and start reading the Quran because the forced conversions are coming sooner than you think. Why are you going to put troops into Ukraine? Why do you think you're still relevant on the world stage? And you don't have any industry. You have no way of manufacturing anything because you've let it atrophy, because your political class has sold out the country to the globalists, the globo homo over the last 40 or 50 years. That's the facts. And you're more worried about Premier League and going down to the pub and just hoping you'll be the last gazelle. I mean, it's funny watching some of these. It's not funny, actually. We have the same problems here in the US in many places. We're not as far along down the path as Europe, Western Europe is. Western Europe's sick and dying. And it's going to be supplanted by a population of people, a demographic that's showing up for the future, that's having children, that has a purpose, a unifying concept. Islam. What's the unifying concept of Englishmen in England or Irish in Ireland? We're seeing some stirrings finally, but now, is it too late? Keir Starmer, I didn't put this on here, Blur, but you can look this up. They've passed legislation now. They have it in, it's going to affect, I think, in the next couple of weeks, that you're going to have race-based, ethnic-based sentencing in crimes where white people will be sentenced to longer prison terms than ethnic minorities because there's disproportionate, you know, this was discussed in the United States and people laughed it down. It didn't go anywhere. It's being implemented in the UK. Do you see what's happening? And so, again, I don't know what the future holds, but when I hear Keir Starmer and Macron and these morons in Western Europe, Ursula von der Leyen, and the rest of these people, I mean, I call them names and goof on them, but it's sad what's happening. They're not relevant. They're just talking. They're not going to do anything. They can't do anything. If you don't manufacture any weapons or the raw materials for the weapons, what are you going to do? You're going to send 20 or 30,000 troops to Ukraine that are undersupplied, that you don't have the ammunition for, and you're going to be introduced to Mr. Kinzel. And the body bags will start coming back to France and the UK. How will the population react? I don't think very well. And so is that the idea? Well, we'll go ahead and do that, even though President Trump has told us that if we do this, we have no NATO shield over us. The United States will not go along with an invocation of Article 5 because we're not being attacked on our soil. We are deliberately putting our troops in harm's way in an active conflict that doesn't concern us. And then we have been told by one of the belligerents that if we introduce our forces into that conflict, they will be subject to attack. And the President of the United States has said, you're not going to drag us into World War III by acting as a tripwire. Yet, you know, and even if they could, how will they supply these people? There's no industry. They don't make anything in these countries anymore. Well, of course they make some things, but not to the level that's required. Does anybody think about this stuff? So unfortunately, I had to put this here again. Let me say, of course, I would prefer the federal government to be smaller. People are being laid off. I think there is a tremendous, it's criminal, the fraud that's taken place in the federal government. And I think there has to be prosecutions, there has to be investigations. I don't see Congress isn't holding hearings because why? Because they're in on it. They benefit both the Republicans and Democrats. They're complicit in the fraud, in the stealing, in the status quo. They never thought that anybody would actually look at this stuff. And what's amusing to me is showing the fact that Trump's this bad guy because he's doing this, but yet you had the same initiatives, at least were talked about by President Obama and President Clinton, two Democratic presidents. And they didn't actually carry anything out, or if they did, it was just at the margins. It was nothing like this, but they at least gave lip service to it. They weren't castigated like this administration is. See, it goes back to the my team, your team thing. I'm against anything that this president does because my guy didn't win or my person didn't win. My lady didn't win. So I'm against anything that this person does. If they cure cancer, I'm against it. And so until I see, the budget deficits continue, this is fiscal year 2025, which remember the fiscal year start in the previous year's October. So October 24 is when the um, fiscal year 25 began. You'd see the previous 2 years, 24 and 23, you'd see the debts are higher in 2025. We haven't seen the benefit. Now, again, they've just been there for a couple months, right? And this Doge thing's only really been going for like 6 weeks. But we need to see, you know, we need to see this red get below these blue and yellow going forward. We need to see the results. People, this is, we need to start rooting this out. And as we find the corruption, the Justice Department needs to get ramped up and start investigating. People need to go to prison so that people understand that you're not there to steal and enrich yourself at the working people's expense and drive this country into bankruptcy. So we'll see if they're able to do it. Now, a lot of people are getting laid off, closing the Department of Education, all for it. Closing all of these agencies that were created by executive order, which was quite a few of them actually. Get rid of them. Get rid of them. It's amazing, I've always said that a lot of the political problems are very solvable. There's just no political will to solve them. And a perfect case was the border crisis. I think the last numbers I saw, I mean, they were down to like 400 illegal crossings, okay? Because they made it a priority. And they have the perfect person that has big shoulders to take all the thing. The Tom Holman guy, whether you like him or don't like him, he knows what he's doing. He's focused on the problem. He has a political air cover, and he's making it happen. And he'll stand there in the breach with this ridiculous press corps, these Bolshevik, okay, and he'll give it right back to them. That's the kind of people you need to have. And he said it exactly right. We have immigration laws that were passed by the Congress. This president's going to enforce them. He hired me to do it. I'm enforcing them. If you don't like the laws, you should change the laws. Until that happens, we're going to enforce the laws. That's away. That's it. That's all that needs to be said. Are there going to be instances when you're doing something like this where you can go find some case here and there, like I said, the sob story, here and there sob stories? Yeah, because you're dealing with a huge problem that needs to be dealt with, and there's not going to be perfect. Okay, where those things happen, we should try to fix them. Okay, where supposedly the gay hairdresser got nared and got sent to El Salvador with gang members. I don't know if that's true or not. That's what the press was saying. There could be instances like that. Where they are identified, they should be rectified and fixed. But that doesn't mean we shut down the whole process because we can find an exception here or there, or we find a sob story here or there. Because if we don't fix the problem, then the problem is going to, manifest and create other problems that we don't want. And this is what the people voted for it. What I find interesting is, and what we have to keep saying is that regardless of what the press likes, regardless of what the left likes, this administration was very clear, and the president was clear throughout the campaign what he was going to do. I guess people didn't believe him. Now he's doing it, and they don't like it. I know they don't like it. Okay. And so there's going to be a congressional election in, 2026, and we will see if by then, if this reverses. If people are seeing the benefits, if their economy is starting to, that's why we're trying to take these hits early. I'm not saying it's going to work. I'm not saying I would do it like this. I'm just telling you what I think the plan is. But we need to see results need to be seen, and they need to be manifested in people's lives to their benefit, or they're not going to go along with it. Again, people vote their pocketbook number one. So I found it interesting. This is Soviet dissident Vladimir Bukovsky in 2026. Quote, there will be a collapse of the EU just like the USSR collapsed, unquote. So I want to read this for the benefit of the people that listen to the podcast. This is what he said. Now, I have spent a lot of time in the former Soviet Union. Um, I've seen, I wasn't there exactly right in 1991, but a couple of years later. So I saw how bad things were, at least the beginnings of upward movement and the resiliency of people. But a lot of people suffered, old people, a lot of poverty, a lot of lack of services. The government just doesn't have any money. Health care is non-existent. We saw the declining birth rates. I mean, I've seen it. I've been there. Okay. I've been into provincial cities and towns and villages and seen how people live. But I also saw that how things changed, okay, over time. And so this is a discussion that was in 2006 about the EU by somebody that was Soviet dissident. I have no doubt about it. There will be a collapse of the European Union, pretty much like the Soviet Union collapse. But do not forget that when these things collapse, they leave such devastation that it takes a generation to recover. Just think what will happen if it comes to an economic crisis. The recrimination between nations will be huge. It might come to blows. Look to the huge number of immigrants from third world countries now living in Europe. This was promoted by the European Union. What will happen with them if there is an economic collapse? We will probably have, like in the Soviet Union at the end, so much ethnic strife that the mind boggles. In no other country were such ethnic tensions as in the Soviet Union, except probably in Yugoslavia. So that is exactly what will happen here too. We have to be prepared for that. This huge edifice of bureaucracy is going to collapse on our heads. End of quote. And so this is what I've been talking about. And so, yes, I do have some investments in some European banks right now, but I have a quick trigger finger. Again, things can, you know, a lot of the stock markets in Europe are up this year, but the long-term trend is what it is. And so let's talk about this third world immigration. Whether it was done for nefarious reasons for a replacement ideology, whether it was done as a ill-conceived way to deal with the declining birth rates, to hold up the debt and pension schemes, I don't know. Each person can, but it doesn't matter. We're now at levels where it is not politically possible, like in the UK, for example. If you speak out against these policies, if you try to change these policies, if you, like in Germany, you rally around a political party like AfD, you're just going to be excluded. You're going to be jailed. You're going to be whatever, what have you. And so you're in a situation now where these things cannot be fixed at the ballot box. So so you're not going to vote your way out of it. It's obvious, okay? Because you see that where there are anti-EU politicians or governments, they just marginalize them any way they can, any way they have to, whether they throw them in jail, whether they ban them, whether they refuse to go into coalition with them, what have you, freeze them out of government. Because if the will of the people is brought forth, then they'll deal with this. So you have no way of voting your way out of this. Okay. And so, and again, I want to qualify what I'm going to say for the CIA and all the people that are listening or the, people that are going to, send this out to their deep state friends. Because I have made it on some lists before. I know that. Remember during ESG, I was one of the 100 worst climate change bloggers in the world. I was right there. The list was alphabetical, but they had the top 100 was right under Jordan Peterson. So I know I make these lists occasionally. Not that I take any pride or delight from that. It's just what it is. But qualify what I'm going to say. I'm not advocating for what I'm about to say. I'm just trying to forecast what's going to happen. And so the only thing that I can see, if the people can't vote their way out, is the militaries of these countries are going to have to do coups. They're going to have to take these governments over and stop this. Will they do it? Probably not, because you have these, the military exists for the national security of the country. And so that's probably not going to happen. And so what you have now is the political class understands this. They understand that it cannot. They've went over a threshold where they can't reverse this now. What are you going to do? Go into Luton or go into London and start saying all you people have to go back to Pakistan and wherever you came from? That's not going to work. Remember now, these people have a unifying concept. And I don't, this isn't John just saying this. I'm listening to what these people say. Okay. The internet's amazing. You can listen to the sermons that are delivered in these mosques. These people say stuff in the UK in these mosques that they would not be allowed to say in Jordan, Egypt, Iraq, because those secular governments would arrest them because it's too radical. But they're allowed to say it in the West because of free speech. Okay? They're using your own, they're allowed to have free speech, but you're not. If you go out and stand 100 yards away from an abortion clinic in the UK and silently pray, you'll be arrested, thrown in jail. It's happened. So the political class knows that it can't be fixed now. And so they're going to manage this over time. They're going to try to manage it. What are they going to do? Of course, people are going to speak out. There's always radical elements. Tommy Robinson's in jail right now. I'm not a big fan of his. He's in jail. He's in solitary confinement. If you speak out, uh, they're going to arrest you. They're going to suppress you. They're going to go full totalitarian. They're not going to do that to these other. I mean, it's apparent with the legislation or with the new rules for sentencing guidelines in the UK. And so, you know, what's going to happen? I think it's a positive to me personally when I see Protestants and Catholics unified in Ireland, but is it too late? Are we going to see the emergence of the IRA and unionist militias and acting out against the government over immigration? Wouldn't that be that's a possibility. That's a possibility. Are we going to see ethnic conflict and more violence? Are we going to see what's going to happen when um, Islam doesn't sit down and have Entitlements and coffee with people? You comply or your violence is used against you. Now people say, well, that's not going to happen. It won't happen yet, but within a generation it will. The future belongs to those that show up. They are having children and they have a unifying ideology that they can unify again. It's not the rights of man. It's not the Magna Carta. It's not a tradition of free speech and democracy. It's a unifying, simple concept, Islam, which means, you comply. And not everybody's going to be a radical. But if you go and interview people in those communities, they support Sharia. They support all this. They understand the history of Islam as expansionism and subjugation. That's just reality. And there is no such thing as moderate Islam. Now, I've talked about this a lot because at some point, Western Europe's going to become uninvestable. This is going to be the major problem over the next 20 or 30 years. And they're not going to deal with this. The political class is going to try to manage the decline and manage this and hope nothing happens on their watch because they're weak, they're ineffective, and they're traitors. They caused the problem, whether it was intentional or misguided policies to try to save the welfare states because of the demography issues, which are directly traceable to policies back in the 50s and 60s. Wink, wink, honk, honk, feminism is one of them. And I know this is not popular with people. People are listening to this and going, there's people out there going, this guy's off his rocker. He's just an old boomer out in his front lawn barking at the moon. This is what's happening. Go listen to what they say. Look at what they do. Hiding your head in the sand, ignoring 1,500 years of history is not going to bode well for you. And this does affect investments because the places are going to be uninvestable at some point. Do you want to invest in Lebanon or Syria? They don't even have stock markets. Who would invest money there with constant conflicts? And so even the Islamic sects will start fighting with each other. This is their nature. Don't even get me started to talk about cousin marriage and the effects of that. People should investigate these things. Cousin marriage is prevalent in the Middle East, not only just in the Islamic community, but all communities. What are the effects of that? Look that up on Google or Chat GPT. And so, you know, people don't sticking your head in the sand isn't going to work. And it's not something that's going to happen in the next week. This is the problem. See, people have this cognitive dissonance or they have this recency bias. Well, what are you talking about? Everything's fine today because it was fine yesterday. So that means it'll be fine tomorrow. I'm talking about multi-year, decade situations here. That's what I'm talking about. So we need a reemergence, in my mind, of Christianity, a revival, a something that we can rally around, that European man can rally around, back to the fundamental nature of what was important to us, our values. I mean, if you go look at some of these cathedrals and churches and stuff that were built by our ancestors, the people whose shoulders we're standing on, by the way, and you realize that there were craftsmen that built these things and they never saw the finished product because they took, in some cases, decades to build. And so somebody would be working on something that they never got to even enter and worship in. So there was something bigger than them. There was something bigger than what's the next, you know, order a pizza from Domino's and let's watch the next Netflix shows. Something bigger than being an Amazon count number. And the fact that somebody's going to come after you and you have an obligation to preserve the traditions and preserve the what you were given and handed instead of squandering it or giving it away to an alien class of people who are going to destroy it. And so we need some type of revival, some type of thing that we can rally around. Because again, the future belongs to those who show up, and these people are showing up. All right, that's it for this week, guys. Thank you very much for your support. My channel continues to grow. We have a lot of people coming on as paid subscribers. I think we're catching the trend as things we see this rotation out of tech, out of the status quo of the last 15 years into these undervalued sectors, resource sector, commodities, emerging markets, value stocks. We're taking advantage of that. Come along and join in with us. Actionable Intelligence Alert on Substack. We have the free email, weekly email that goes out where we talk about some of these concepts and basically I curate the things that I'm reading, listening to for that week. Then we have the paid newsletter where we have actionable investment themes in the newsletter that you can take advantage of these concepts. So we also have the Actionable Intelligence Alert Facebook group. All of these things, we have links to these things in the show notes below, and I encourage you to avail yourself of them. Please continue to support the channel, like, subscribe, forward this to your friends. We look forward to doing these. I enjoy doing them, and I appreciate the support. It motivates me, and it helps me to make sure that I do this consistently. So thanks a lot for that, guys. We'll talk to you next week. Have a good weekend.